any kind of media, there is a huge, especially in the past 5 years, a huge growth in people speaking, and not just traditional media, but you have, brokers speaking, you have influencers speaking, you have a lot of stuff going on. But you will be hard pressed, very hard pressed, to find any guidance on overseas investing or global investing. And this is a gap that I think needs to be filled, and we are doing our little bit to start that discourse. Why we had a crash in the stock market, especially in the mid and small cap space in the past 6 months, is RBI essentially saying no to the mutual fund industry for overseas investing in 2022 when they hit that limit. So all of the money that came in since then has come into the same domestic stocks through mutual funds and directly. And that has pushed up the valuations. Now, it is a hotly debated thing. Lots of people have disagreed with me. And you'll get to hear some of those views today as well, I'm sure. I think Deepak has a different view also. But I think certainly it had contributed to that huge surge in valuations. In 1900 was, somewhere around 15, it was 15%, 1.5. Today, it's 65%. But it was not always so. I mean, it has its ups and downs. Japan had its moment in the 1980s. So if you see that gray zone over there in 1990, that's Japan, when it suddenly went to 40% of the global market cap because the Japanese market just soared so much. UK, I mean, we all have the history of the British Empire. So it starts 1900 at 24% and currently at just 3%. A century and more of decline. And of course, you will ask, where is India in all this? India is invisible because we're not even big enough to be a color on the map. And yet, most of us are something like 90, 100% invested in that small little dot, which right now is just 3-4% of global market cap. So the argument is that this dot, by the way, will do very well. We're not saying India is not going to thrive, but the other colors, they also matter. Launched in 2011 by Motilal Oswal AMC, one of the first mutual fund launches, and the return has been incredible, right? 21.88% CAGR. And it's not just hypothetical. I told my father to invest in Motilal Oswal Nasdaq ETF in 2012, not 2011, so we didn't catch the launch, but we caught the rally that subsequently happened, not by a big amount because we didn't know any better, so just 5 lakhs. But for whatever it's worth, we were able to catch this incredible rally, far more than the Nifty. But of course, there is another side to this. Guess the fund? HSBC Brazil Fund. So this is the flip side of international investing, where the CAGR since the same time, 2011, is minus 2.74%. It has burnt away capital. And one can argue that if I'm just selecting Nasdaq, I have a survival bias. I am picking the best performer. What if your money was in HSBC Brazil Fund? So I did a bit of a calculation, a rough calculation. What if you put 5 lakhs in Nasdaq and 5 lakhs in this Brazil fund? Where would you be? So you'd be at 16.4% CAGR, which is much less than the 22% of the Nasdaq, but still more than the Nifty. And more importantly, not correlated, highly correlated with the Nifty. So even if you take a blind approach where you're just putting money in the MSCI World Index, you're still going to benefit from diversification. In this and future sessions, we'll also cover things like immigration, travel. Some of you would have noticed how expensive our domestic destinations like Goa have gotten compared to a Vietnam or a Thailand. So this is very much part of a global outlook, right? Every time we have something happening in this market, why not compare it, including in where we choose to travel. So before we get into the mechanics, just a quick introduction of Mayuresh. He's co-founder at Zinc Money. He is a SEBI-registered investment advisor.
As Neil introduced, I'm one of the co-founders of Zinc. We are a new age fintech that's focused on helping parents save for their kids' foreign education specifically, and also looking to help Indians who globally want to diversify their portfolio. So it's both use cases. As Zinc, we are registered as a broker dealer in Gift City, right, which allows us to trade on any exchange in the world other than the Indian markets itself. Right, we achieve that with a tie-up with a global broker called GTN, which gives us access to any market and pretty much any security across the globe. The second license we have is called a Payment Service Provider License, or PSP for short. This allows us to open what you may call colloquially as dollar accounts for resident Indians, right? So for everyone in this room, we could open a dollar account in your name. You can remit money to that account
via dollar wallet, right? We should call
it. The term used is a payment account. So the word account is still correct. It's not a bank account because it's an account issued by Zinc as a regulated entity. Your money is actually kept in safekeeping with an actual bank at the back end, which is called a nodal or an escrow bank, right? But effectively, what we give you is like an internet banking solution, which you would use normally for conducting your transactions, right? And a mobile app, obviously, I mean, it goes with that. Ordinarily, it is very hard for resident Indians to open foreign currency accounts, largely because of KYC complications or minimum ticket sizes that a lot of the foreign banks would require you to keep. So if you were to try and open an account in Dubai or Singapore, they would expect you to keep a fair degree of minimum balance, which kind of puts it in HNI, UHNI kind of categories. But we are democratizing that process, so you can literally open a zero balance account with us. The final license that we are just about in the process of getting in Gift City is a finance company license. In India, we'd call this an NBFC. With this, we are actually going to be issuing dollar education loans to Indian students studying abroad. So, you know, that the combination of all of these three licenses is what enables us to give an end-to-end service to a client looking to send their child abroad, or for someone seeking global diversification per se, if you're considering overseas investment, because it is per individual, right? So what we have seen some of our clients do is that, you know, if you're saving for your child's education, you do it in the name of the father and the mother, and then you kind of automatically double that limit. Right. As Neil also rightly mentioned, it's not a tax that you lose, right? You do claim it back in your returns, and most of the people that we have seen are actually advanced taxpayers, right? So to that extent, the TCS offsets your advanced tax liability. So it's not like the money is gone and it comes back whenever your IT return finally gets processed and you get that refund, right? So for most people, practically speaking, this limit is sufficient. In fact, that 7 to 10 lakh actually helps with the rupee depreciation, because otherwise absolute number of dollars was reducing year on year what you could do through that. Whenever you're investing overseas, you have to take into account three things, right? One is the Indian tax law, because you are a resident Indian. Second is the tax law of that jurisdiction, so US being a case in point. And third is actually the double tax avoidance agreement between India and that country. Now, India has DTAs with about 100 countries, and they're largely similar. I mean, it's kind of templatized. The US is a great example of that. Capital gains under the India-US DTA is taxed in the country of residence. So you pay only Indian income tax on capital gains, not US tax.
So the finance minister in the latest budget said up to 20 lakhs, if there is an error, there will be no penalty. So that's a big relief for small investors who missed out on a little bit of maybe currency is not captured correctly, etc.
No, that's absolutely right, I think. But again, most of this is automated, right? So it's like the capital gain statement that you would get out of, you know, your domestic broker, right? So this is just one more statement that you're getting out of it. Capital gains is also, the computation is slightly tricky for foreign assets, because the exchange rate that you apply on that is not necessarily the exchange rate you traded it at, but the Income Tax Act has a slightly complex procedure where you have to take the SBI TT buying rate on the day that happened for both, you know, purchasing and sale. Again, that's automated. You just get this out of the box while you trade with most of the platforms, right? The one point which I just wanted to cover in the India-US DTA, which most people may not be aware of, is that it doesn't cover inheritance tax, right? In India, we don't have an inheritance tax, so it's not something we think about actively, right? Now, in the US, for a non-American non-resident, which in this case is most of the people in this room, you're a resident Indian, which means you're not an American and you're not a resident in America either. The inheritance tax kicks in at $60,000. So let's say over the years you've built up a portfolio of 100,000 or 200,000 US dollars. And unfortunately, if something were to happen to you and you're no more, right? There is a 40% inheritance tax in the US.
I have a son who is in 9th grade, and 4 years later, he'll be doing his bachelor's. And he's interested to do his bachelor's abroad, away from India. We don't know where yet. So I would like to build up a corpus for his education, bachelor's education in US dollars. So you mentioned about Gift City and an account and all that, and also there was a talk about LRS. So let's say I want to build a corpus and not come under LRS. I don't want to cross the 10 lakhs per annum. So I would like to build up a corpus over a period of 4 years, say 40L. What products does your Zinc provide? And during that corpus period, do I get any kind of interest or any returns or anything like that?
No, absolutely. I mean, in some ways, you're the perfect archetype of a Zinc customer or client we would like to serve, right? When you speak with us, we'll consider your risk profile, right, and your risk appetite, and therefore decide, whether you want equity exposure, debt exposure, and obviously considering the time horizon that you have, right? One of the big challenges that most people face, and this is true in India, it's not necessarily in overseas investing, is if you have an event like education that's going to happen, you should actually be reducing your equity exposure the closer you get to that date, because you don't want the market to tank 30% one day before your child goes, right? And that would be a disaster. So you actually need to constantly keep rebalancing your portfolio so that by the time your child goes, the equity exposure comes down to minimum, and by the time the child is in the last year of study, the equity exposure should actually get to zero, right? What we offer is tailored portfolios to your risk and instruments which actually help you achieve that kind of profile.
So I'm an incorporated partnership firm in India, and I'm opening an entity in another geography in a market, let's say Singapore. And, I would like to control the commercial banking needs for my entity in Singapore, typically working capital, business and accounts. And so I open it up, let's say, with Zinc. Now, when you look at this, let's say I raise investment here to fund, my entity out there. Can I put in my investment money here in your current account, which you open for my firm out there? Because in Singapore, let's say there's ACRA compliance. I will have to regulate myself with the banking industry's novel. But I don't want to open a bank account there. Instead, I will use something like a Zinc account here. I will raise the money, I will put it in, and then I will use it for my capital needs purpose. That is one. Secondly, if I open a capital account for my firm in Singapore, and whatever I invest here in terms of dollar, will that be brokered through a broker-dealer relationship in that market? And will LRS also apply to firms? And can I take it back out every 120 days like a regular cycle?
Corporate transaction doesn't come under LRS, right? LRS is actually individuals. So the LRS rules don't apply. What you are talking of would be ODI, actually under FEMA, Overseas Direct Investment, right? To be completely honest, given that remittance out of India is controlled, and that's a capital account transaction, what you're talking about, actually has to happen through an AD1 bank, right? Whether it's for LRS or under ODI, this has to happen. And whatever the ODI regulations that pertain to the specific industry that you operate in would be something that the bank is looking at. So without looking at the specifics of the case, a bit hard for me to
I understand that. Yes.
comment as to whether that's permitted / not permitted, because there are permitted lists, there are lists where permitted with specific RBI permission and there are not permitted, right? So it actually varies. Could you, would running this whole thing out of GIFT be more efficient than you doing this out of Singapore? Potentially, yes. Right?
Yeah.
But and we can give you a multi-currency option also, by the way. So we can do USD, SGD, AED, Euro, 8 currencies which are permitted in GIFT. We can do that. The real question is then, would you need local banking rails in Singapore or not?
Yes.
Right? Becomes a question, because if you have normal transactions that you want to collect money there, you want to make payments there, if you're doing it out of GIFT City, then every payment is an international payment. Right? While we can be much, much, much cheaper than a bank would typically charge you anywhere between $15 and $25 per international transfer out of GIFT City. Right? We can do it for 5. Right, but if you had local payment rails in Singapore for local payments, it would be cheaper than that, right? So I'm being completely honest.
I have an LUT on my firm here, which basically gives me cross-border transaction ability on foreign currency payment. So if I had not opened my entity there, I would still be getting inward remittances here on my currency, whichever currency it comes in, and it get converted to a constant currency model here, and I'll be taxed for whatever it is. But because it is sitting, let's say, in Zinc, can it directly come there and I can take?
You can collect payments in GIFT City. That's permitted. But again, I mean, without understanding the specifics of the case, perhaps we do this offline after.
Sure.
Because of there's so much uncertainty that Trump has introduced in the world, and that's not just in the field of investing. I mean, he is like taking a wrecking ball to the whole, every multilateral thing, whether it is WHO, WTO, whether it is NATO. So you don't know what will replace the kind of order you have seen since the Second World War. So that's all up in the air. So I mean, I attended this session with our finance minister, and she said one thing is for clear, that multilateral trade is gone and now we have to go into bilateral negotiations everywhere. So that's like a huge change.
Yeah, I mean, it's literally every morning you wake up, it's what did Trump say today?
But actually, you see, this was, I mean, when he won, much before he took office in November, I had written a piece in Economic Times where I said that anyone who's saying that Trump will come and now this will happen to equity markets, to currency markets, to bond market, must be smoking something. Because you don't know what that guy will do. So how are you so confidently talking about the second and third order impacts? And so much of what he said, even in his campaign, was contradictory. That you're saying that the purchasing power for the average American has gone down, and then you're saying I'll put tariffs on Mexico and China and Canada, which means they'll be hugely inflationary. So right now, consumer confidence has really gone for a toss in the US, because no one likes this kind of thing of changes every day. And if you had to compound uncertainty, you had to marry Trump with Musk. So
I'll have a very quick chat with Prashanth about their outlook towards education, in particular building that corpus.
Education is simply the only way we can leapfrog and be a true global superpower, right? Most of the parents, while they had this aspiration of wanting to send their kids, they were saving in either gold, fixed deposits, land, and these are all asset classes denominated in INR, and all perhaps that not just perhaps don't keep up with inflation in India, but they definitely don't keep up with the inflation and cost of education overseas. So not only do you have to beat the dollar rupee depreciation, but you also have to meet the inflationary change in terms of the cost of the education. So there's a double whammy effect. You could access international asset classes. You could do this in a compliant way, in a tax efficient way, in a systematic way. But the lack of information was very high. And that's, to be honest, when I started following you on some of your posts, the lack of information was so high. Our mission is to just basically demystify this asset, like creation of this corpus.
My name is Rajneesh Pathak. I'm based out of Mumbai. Run a company called Global North. We've been in this practice for the last 6 years. And we specialize in immigration by investment. So we specialize in immigration by investment over 25 plus countries. Like the name suggests, that it is by investment, right? But I read an article this morning and someone quoted here as well. Immigration is not only about migration. Now, anyone who doesn't fit into, let's say, going through education, going through job, going through family sponsorship has no choice. Someone like me, right? But to go through investment where merit is only money, the investment. So different countries have different avenues and options to invest. Many countries have multiple options as well, right, to do this. The gold card is no different than a country offering a donation, right? It is a donation, it is a cost. If you see governments are doing this, countries are doing this for job creation, economic development, cheaper capital. You are doing this for the residencies and citizenships. And the companies raising money, and these are all private companies, raising money through this route are doing it for cheaper cost of capital or no cost of capital for their projects. So each one in the equation gets a benefit. Each one in the equation has an objective to do this. So these countries have seen a wealth effect, which India is potentially, possibly seeing. Everyone talks of next 10, 15, 20 years golden period for India. They've seen this, let's say 10 years ahead of us. And these are the people who are driving this ask and demand for immigration by investment. Immigration is changing, a lot of things are changing, and I think it is raising a lot of money, including US EB5. This concept basically has one key factor and parameter, which is the objective. It is never the cheapest, the easiest, the quickest program which will fit you. It is your objective. The question why will determine which country and why you're doing this, right?
All right, everyone. Thank you so much for coming. And thank you to our wonderful speakers today. Lovely having all of you. Thank you, Aleksey.